The newly introduced taxes on one hand and a hostile central bank on the other. These are the toughest two problems that cryptocurrency industry in India faces. So what is set to happen here on? Is this the beginning of the end of cryptocurrency industry in India? Or like always, Indians will find a jugaad or a way around the regulations going ahead. I'm Sachin Dave, Senior Editor with Economic Times, and along with Sugata Ghosh, Associate Editor with Economic Times, we'll try and go through the history of what has happened up until now and what could happen from here on for cryptocurrency industry and the investors. The biggest issue that mars the cryptocurrencies in India is the taxation. The government in the recent budget brought taxes on cryptocurrencies. The government said that any returns from cryptocurrencies would be taxed at 30%. Not just that, the investors will be required to pay 1% TDS or tax deducted at source on every transaction, which essentially means that if you're not making profit, or if you're not making returns on each trade, then eventually your capital might just erode or it might just become zero after 20-30 trades. This has led to many investors sitting back. Not just that, in March or by the end of March, there was a sudden spurt of transactions on cryptocurrency exchanges where small investors just withdrew their money and are holding on to that money, or in some cases they have moved a part of the money in some safe bets like Ethereum or Bitcoin. This has resulted in a sudden fall on daily transactions on cryptocurrency exchanges. Transactions have been down by 80 to 90% on top exchanges if you compare it to say a few months back or last year. This metrics is really important for cryptocurrency exchanges because more transactions mean more money to be made for exchanges, and secondly, a transaction is one of the barometers on which cryptocurrency exchanges raise funds through their investors. If there are no transactions, which means that India is not a lucrative market. Apart from that, the taxation is not just paying 30%. Recently, the government even said that you cannot set off losses against profits that you've made, or vice versa. So, say for instance, you have made rupees 1 lakh by trading Ethereum, but you have lost rupees 1 lakh by trading Bitcoin. In ideal situation, you can set this off if this was say equities, but in this particular case, your loss is fine, but on the profit that you have made, you are still required to pay 30%. This would mean that, that for investors, this is not something that they would look forward to, because for any investor, even the smartest ones, they end up making losses on certain trades. Now, those losses will be a null, zero-sum game, while the gains, on the other hand, you have to cough up 30% on that. This has really meant that the investors do not find this an attractive bet. What has also happened in the last 15 days is that many exchanges feel that this would result in many Indians or many Indian investors moving to some of the unregulated or some of the exchanges that they can access from India through VPN or through other sources, like the Chinese exchanges, which would mean that not only will the government not get the taxes on these trades are something that the government really fears. They are outside the gamut of the Indian legal system.
When you question the future of money, then men who create money will not like it. If crypto takes off in a big way, then the future of money, the money as we have known it, will change forever. And it's understandable for central banks to become suspicious, to question it. We can all understand why RBI is saying what it is saying. It has minced no words to say that it's uncomfortable with crypto. Crypto is created by people who mine it, and that's outside the control, outside the domain of central banks. and no monetary authority would immediately like it, and that's perfectly understandable. So here we have a situation in India where RBI, senior officials of RBI, every other day they're making it abundantly clear that they don't like crypto. They would be happy if crypto is banned. The government is unwilling to do it, at least officially or openly. And we can imagine for two reasons. One, it doesn't want to probably appear like China. And secondly, there is a Supreme Court judgment, a March 2020 Supreme Court judgment, which had set aside the earlier RBI clampdown on cryptos. The investors who have the wherewithal, they are transferring their cryptos to overseas wallets. They're opening accounts with platforms abroad. And people who can't, they're just sitting ducks. Their money is locked. They don't know, they have already taken hits because of the volatility, and they don't know when they can sell out the cryptos at what price and take the money out.
The facts are these: the investors that were trading in cryptocurrencies, the investors that were putting a lot of money in cryptocurrencies, have now taken a step back. Many of them have made some money and they're sitting on that corpus till more clarity appears. Apart from that, some of the large investors, our sources tell us, have started moving to Dubai and Singapore, where probably the regulations are a little better than in India, especially around taxation. So what this could mean is the cryptocurrency exchanges claim that this is resulting in brain drain. This is something that the government may have to look here on.
So here we have an oppressive tax regime. We have 30% tax, 1% TDS, something which can tax the cryptos out of existence. And on another hand, we are finding banks which have taken the hint from RBI and are shutting their doors to crypto traders. So you can't use your bank money lying in your bank account to buy or sell crypto. Crypto platforms can't open accounts with banks to process their transactions. So it's slowly, the crypto industry in India is dying a slow and natural death.